Did the coronavirus trigger a stock market crash? Let me know what you think in the comment section below. I'd like to hear what your thoughts on this. Last week, the stock market experienced increased volatility, and the fear caused by the spreading of the coronavirus has spilled over the stock market. Friday, the stock market have experienced the worst decline since October 2nd of last year in terms of percentage. The stock market was down, with the Dow Jones Industrial losing 603 points, the S&P 500 down more than 2% at one point on Friday and closed down more than 1.5%. And the Nasdaq lost almost 150 points. So did the coronavirus cause the stock market to decline? Let's take a look at the stock market and see if the coronavirus indeed caused the market to crash last week. And looking at this chart here with all the indexes, remember on the 22nd, I have highlighted that the Nasdaq have closed a new all-time closing high, and none of the other major market indexes closed at an all-time high along with it. Then on the following day, it again closed with a new all-time high. The Nasdaq closed with a new all-time high, and again, none of the other market indexes closed at a new high along with it. So that was the first sign that the market was telling us to be a little bit more cautious and start taking some risks off. And I have posted a video here on the 22nd to alert you the market message and to start thinking about being a little bit more cautious and taking some risks off. I have posted a link of the video in the description below. Now, looking at this sentiment chart here, we have the S&P 500. You can see the S&P 500 has been declining, while the VIX is also went up above the 18 level, and also the put-call ratio is above 1. So the market sentiment is certainly pointing at a increased level of fear coming in back into the market. And on this chart here, I basically just highlight the time where the VIX have went up above the 18, and also the put-call ratio is above 1. So you can see most of those times have resulted in a little bit more continuation of the decline. So the VIX is above the 18 level with the put-call ratio above 1. The market is clearly indicating to us that a continuation of the decline is most likely in the coming days. And looking at this new high, new low chart here versus the S&P 500, we can see the S&P 500 actually took out the previous pivot low, but the new high is still above the new low. The new high, new low is sitting positive. And on this chart here, I basically have highlighted the time when the new low is more than the new high. And most of those times we see a further decline from the market here. So right now we're basically keeping an eye on the new high, new low to see would this come down negative, and see is this going to be result in more of a decline on the S&P 500. And looking at the Nasdaq 100 new high, new low, we see that the Nasdaq is actually went negative on the new high, new low, but the index is still above this pivot low here. And once again, I have highlighted the Nasdaq new high, new low chart to point out the time when it have more new low than new high, and you could see there are these time of decline when the new high, new low is negative. So right now with the new high, new low sitting at negative territory, and the Nasdaq is still above this pivot low, I would expect that we could see further decline from the Nasdaq in the coming days or the coming weeks. And also just to remind you that from the advanced decline, we see this negative divergence when the Nasdaq was making a new all-time closing high. So that's another indication from the market that the internal is showing some weakness, and we should exercise caution. Now let's take a look at the cash index, and looking at this S&P 500 20-year monthly chart, you can see there's this shooting star candle. It went above this megaphone channel peak above it, but unable to close above it. So right now, so we could see a little bit more of a pullback. And looking at the daily of the S&P 500, you can see it came up to this trend line near the 3340 on the 1618. Then last week, it sort of booked down on Monday and then chopped around at the lower trend line here, at the lower channel area. Then on Friday, it booked decisively, and right now it seems to be getting a little bit bounce off the 3220 area. So I'd be looking to see would it be able to hold above this 3220. If it is unable to hold above this 3220, then the next level of potential support will be somewhere around this 3205, essentially 3200. And then if we break that 3200, I'd be looking at the 3154 as the next potential test for support. And looking at the EMini SP 500 future, the ES, you can see the monthly ES chart also printed a shooting star candle, came up to this upper trend line here, and the 1618 extension near the 3320 area. So right now, again, we're basically looking at this bearish candle for a potential pullback. And here on the daily chart, you can see that the ES was chopping around near the lower end of this lower region of this price channel. And then again, on Friday, just like the cash index, is booked decisively. And right now, I'm waiting to see would it come down and test this 3203, essentially this LVN here, and close to the 3200. And if we break this 3200, then I'd be looking at this 3158. This LVN low volume node here for the next potential test of support. And here's the market profile of the ES in this section here below the current price. There are a lot of unfinished business, and if it's going to come down, there's a lot of work for the ES to resolve. And then looking at the NQ, the EMini Nasdaq 100 futures, it too have printed a sort of like a shooting star monthly candle. It peaked above this channel, this megaphone channel, and went above the 8911, this 78.6 extension on this symmetry move. And right now it's pointing back to the channel, so we probably could see a little bit pullback toward the 8051 area. But in the meantime, on the daily chart here, we see that it is still above this near-term trend line, and it did move above this symmetry move, this 100% symmetry move, but right now it's pulling back, and it is within this balance area, this high volume area. When it make this all-time high, it seems to have some buyer cutoff, so we could see a possible pullback to see would it be able to hold this trend line. If it's not, then I'll be looking for this thing to continue to pull back and possibly back into these low volume area and into this next high volume zone. And here on the market profile for the NQ, you can see similarly to the ES, there is a whole bunch of work to be get resolved. Now let's take a look at the US dollar. The US dollar here is still chopping around inside of this channel near the bottom of this channel. And it seems like it might want to come back and retest this 97 area. And if it doesn't get a bounce off of this channel and move back up, I'd be expecting the dollar to come down and break this channel and move toward, move lower. And for the crude oil, remember we were talking about oil. There's actually two range right now. We were talking about this range up here, and you can see how it come up. Even at the bottom of this range, we see that it look above and fell here, and then came back in, went to the bottom, came up to the top, and just kind of bounced around, look above and fell, and then came down. Test the bottom, look above and fell, and we say if it is unable to get back above it, we expect it to come down to test the bottom again, and lo and behold, you see that it came down to this bottom here. So now we want to see if it could bounce up and get back up to the upper range of this balance area, or will it come down and break and then go down and try to extend this symmetry move of 100% down to the 40 area, or would it be coming up, look below and fail and then come down and then pushes up? So those are possibilities that we have to keep an eye on for the crude oil in the coming days and the coming weeks. Then looking at the gold market, the gold actually pretty bullish here. It finally broke out of this swing here. It broke out of the swing and then pulled back the first time, and now it is breaking above that swing once again. So what I'm looking at right now, since it broke this wedge, there is this major move, and that will bring up to 1743 area. And also, if we do a Fibonacci retracement with the extension of 161, that would bring the gold to somewhere near the 1750 area. So the first thing is I'd be looking at this extension here, this 127 near the 1647. If we get up this 1647, then I'd be looking at this two level here, which in confluence of each other somewhere near the 1680 and 1690. If we could get above that, then I'd be looking at the 1750 area for the next target for gold. So in summary, the Nasdaq is showing negative new high, new low, and also it is showing negative divergence between the advanced decline when it made a new all-time closing high on the 22nd and on the 23rd. And there's also a lack of confirmation from other market indexes when the Nasdaq made a new high. And the VIX is now elevated above the 18, and the put-call ratio is above 1. So most of these signs appear before the big decline on Friday. So whether the stock market decline is caused by the coronavirus or not, it is certainly a catalyst that is causing the acceleration of the market decline. Until the stock market internals and sentiment turn back to positive, one should continue to exercise caution and be more defensive in the stock market. So I hope you find this video to be informative and useful. Click the thumbs up and help me smash the YouTube algorithm. And click the subscribe if you'd like to see more of these videos. Let me know what your view is on the stock market. Are you planning to buy the dip? Are you taking some risks off? Post your views, comment, question, and any requests or suggestion for future video in the comment section below, and I will answer them as soon as possible. Thank you for watching, and good luck on your trading.